Most people think getting wealthy is all about working harder, hustling nonstop, or taking huge risks. But here's the truth. You don't need to work 80-hour weeks or gamble on the latest hot stock to build real wealth. In fact, nearly 80% of millionaires in the United States made their fortune by investing in the stock market, specifically through long-term value investing. Did you know that 95% of stock traders lose money over time? It sounds shocking, but it's true. Value investors, on the other hand, focus on finding great companies at a discount and hold them for the long haul. This slow and steady strategy leads to steady, long-term growth that the majority of traders miss out on. In this guide, I'm going to show you how value investing can help you achieve both financial success and a life of happiness. We'll talk about the secrets that the top investors like Warren Buffett use, why time is your best friend when it comes to building wealth, and how small, consistent actions can lead to big rewards. Ready to learn how to get wealthy and stay happy without burning yourself out? Let's dive in. Chapter 1. The Value Mindset. Unlocking the wealth within. Wealth starts with the right mindset. If you don't believe in the value of patience, you'll never succeed as an investor. It's not about getting rich quickly. Warren Buffett, the king of value investing, always says, the stock market is a device for transferring money from the impatient to the patient. That's the value mindset in a nutshell. Buy smart, hold long, and let time work in your favor. But here's the secret, it's not just about numbers. Your mindset controls your investment choices. Emotional decisions are the quickest way to lose money. Successful investors like Buffett and Charlie Munger avoid this by sticking to their principles and not reacting to every market swing. It's about staying steady and thinking long-term. Research shows that investors who take a patient, methodical approach end up with far higher returns. In fact, a study by Dalbar found that individual investors underperform the market by about 5–6% annually due to emotional trading. So, keep your emotions in check and stick to your game plan. Remember, the real wealth comes from consistency. Value investing isn't a sprint, it's a marathon. And when you believe in the power of compounding, you can start making smarter, wealth-building decisions. It's like planting seeds, if you water them, they'll grow. And your wealth will compound over time. Chapter 2. Hidden Gems. The Art of Finding Undervalued Stocks. Now that your mindset is ready, it's time to start finding those hidden gems, undervalued stocks that others overlook. Value investing is all about buying great companies at a discount. Think of it like shopping at a clearance sale, but instead of clothes, you're buying future profits. The key to finding these opportunities lies in fundamental analysis. This means looking at a company's financials, revenue, earnings, debt, and assets. But don't stop there. Dig deeper. Find companies with strong leadership and a competitive edge. The goal is to spot the value others miss. A great tool to use is the price-to-earnings, P/E ratio. If a company's P/E ratio is lower than its historical average or compared to its industry peers, it might be undervalued. But remember, a low P/E ratio isn't always a green light, it's just the first step. Also, check the company's debt. If it's carrying too much debt, it might be a warning sign. But some companies with strong earnings and manageable debt can still be excellent investments. For example, Apple has consistently had large amounts of cash and manageable debt, which has helped it survive recessions and even thrive during them. And remember, value investing isn't about finding a cheap stock. It's about finding a quality stock at a price below its true worth. Don't chase after the latest hot trend. As Benjamin Graham, the father of value investing, said, "Price is what you pay, value is what you get." Chapter 3. The Secret Sauce. Combining wealth with well-being. Investing isn't just about growing your bank account, it's about improving your life. When done right, value investing can offer you the financial freedom to live life on your own terms. But wealth isn't the end goal, happiness is. There's a proven link between financial security and well-being. Research from the National Bureau of Economic Research found that people who feel financially secure tend to be happier and less stressed. So, investing in your future doesn't just increase your wealth, it also improves your quality of life. The real question is, how do we balance the pursuit of wealth with the need for happiness? A good place to start is by setting clear priorities. While growing wealth is important, it should never come at the expense of your time, health, or relationships. A balanced life is the true key to long-term success. Another crucial factor is financial independence. As you invest, keep in mind that the ultimate goal is not just making money, but freeing up your time to enjoy the things that matter most. Once you reach that point of financial freedom, you can focus on what truly brings you joy. The simple fact is, wealth without well-being can feel hollow. Aim to build a life where both go hand in hand. Focus on financial growth, but don't forget to nurture your personal happiness along the way. Remember, money is a tool, not the destination. If you found this chapter helpful, be sure to subscribe so you don't miss the next big secret to value investing and building wealth. Chapter 4. Value Investing 2.0. Modern Tools for Timeless Strategies. Value investing is not a static strategy, it evolves with the times. The traditional methods are still effective, but now we have modern tools that can make the process faster and more efficient. Data analytics and AI-powered tools have revolutionized how investors identify undervalued stocks. Today, platforms like Morningstar and Yahoo Finance offer detailed data on company fundamentals, making it easier to perform your own analysis. These platforms allow you to compare companies side by side, giving you valuable insights into whether a stock is undervalued or overpriced. But that's not all. iTools can also help you spot patterns in stock prices and predict future trends. While nothing is foolproof, using data to inform your decisions can help minimize risk and maximize returns. Even traditional investors like Buffett use modern tools. He's known for utilizing technology to track financial data and analyze market conditions. Let's not forget about online investment communities. Platforms like Seeking Alpha or Reddit's R-Investing allow investors to share insights and opinions, making it easier to spot emerging trends. But always do your own research. Don't just follow the crowd. Even the tools that seem simple, like stock screeners, can help you quickly filter through thousands of stocks to find those that meet your criteria. This way, you focus on the best opportunities, cutting out the noise. Chapter 5. Compounding Joy. How small wins lead to big happiness. We've all heard about the power of compounding in investing. But did you know that this principle applies to happiness too? It's the small wins that accumulate over time and lead to big rewards. Take a look at dividend stocks. These companies regularly pay out small portions of their earnings to shareholders. While the payouts may seem small, over time they add up. Reinvesting these dividends into more shares creates a compounding effect. The same concept works for happiness. Small positive actions, like exercising, reading, or spending time with loved ones, compound into a much happier life. The key to both wealth and happiness is consistency. Whether you're reinvesting dividends or working toward a personal goal, the habit of building momentum is critical. Over time, the results can be extraordinary. And here's the beauty of compounding: it rewards patience. You don't need to make big, bold moves all at once. Just keep showing up every day, taking small actions toward your goal. You'll be amazed at how quickly your wealth and happiness grows. Chapter 6. The Value of Time. Achieving wealth without sacrificing life. Time is your most valuable asset. When it comes to investing, it's not just about growing money, it's about how much time you can buy back. Value investing offers you a way to do this. By investing in solid, undervalued companies, you can build wealth without being chained to your job or sacrificing your personal time. Financial independence is the ultimate goal. Once your investments are growing steadily, you don't need to trade time for money. This gives you the freedom to pursue what you love. Studies show that people who achieve financial independence are significantly happier. A survey from Vanguard found that 73% of financially independent individuals reported higher levels of life satisfaction. Time is also valuable because it's the one resource you can never get back. So, don't just focus on money, focus on buying more time to spend on what truly matters. That's the beauty of investing for the long term. You make smart decisions now, and time works in your favor later. It's not just about the dollars, it's about what those dollars can give you. So, ask yourself, how do you want to spend your time? Make sure your investments help you live the life you truly want, without sacrificing the moments that matter. Don't forget to subscribe for more tips on how to master value investing and live a life of wealth and happiness. In these 6 chapters, we've combined actionable investing strategies with a holistic view of wealth and happiness. By focusing on both the financial and emotional aspects of investing, you can build wealth and enjoy a fulfilling life along the way. The goal is simple: invest smart, live richly, and create a life you love.